Hey folks, Dan Frio here, the rate update. Today is July 26th, 2021. You're going to remember this date. This is when the housing market ended. That's the headlines everywhere, and that's what we're going to discuss next. So don't go away. We'll be right back. Well, if I'm just sitting here and looking at the headlines and everything, what am I going to see? The housing boom is over. What a shame. It lasted pretty decent time frame, but let's dig into it because I don't see the housing boom being over. I'm not sure if you guys do or not. So a lot of the data that's coming out right now is basically saying that the new housing sales basically fell off a cliff, and they're down 6.6% versus last month's. So why is it? Because on our side, we don't see any slowdown in applications, but it might be on the other side of the spectrum. Maybe it's the builders. Here's just an idea. I got some builder ideas and then some forbearance ideas and supply chain ideas. So I have a condo in Florida and just went to buy a new air conditioner for it. And they said it's going to take at least 3 to 4 months to get a unit for your condo. Well, if it's just one little unit for one condo, how do you think people are faring if they have a whole development going up? So we got supply chain issues. We also have labor issues. You can see I don't know if you guys watch, but you can watch a lot of big home builders. Their annual reports, they come on and they basically will do them live, or they'll do them by Zoom, or they'll do them on CNBC and all those other things. And the spectrum there says labor shortage and supply chain issues. And then you also have the spike up in prices, and a lot of pieces of the construction part is lumber, electric, all that other stuff. So if you have a shortage of lumber, it takes forever to get any components or appliances, and everything also is jacked up in prices there. Now let's throw another curveball into this. You have millions of people in forbearance, and they're in that forbearance, and if they build another house, they're going to have to move out of their current house and go into that house and start a new mortgage payment. So a lot of people are postponing buying a house until the forbearance is over. I'm going to mark my word on that. We're going to come back in about 6 months and play these videos, and I'll eat crow if I'm wrong. But I'm pretty sure I'm going to be accurate on this. So there's a lot to do when it comes to the housing market. Is the boom over? It ain't even started. So that's my information on that. And I have tons of data, and we're going to go through every day this week, and I'm going to support on how the housing market is not dead. Watch this report by Rick Santelli, and then we're going to come back and go over what's going on with mortgage rates today.
Time. New home sales out a few moments ago. For that, we're going to get to Rick Santelli. Hey, Rick.
A few moments from now, Carl, I can't see that far into the future, but we are looking for a number right around 800,000, and it's a big miss. 676,000. 676,000 seasonally adjusted annualized units. And before we see any revisions, if we continue to look at the past month as 769,000, that would put it down a little over 6.5%. And do remember, pre-COVID, we were around 730,000 in February of 20, around 756,000 in January. So now we are dipping below pre-COVID levels. And really, this is one of the few reads that has done that outside of the reads right after COVID hit in early 2020. And the high watermark of 993,000 was in January. So you could see that we have fallen, over 30% from that level. And to really dig down on whether it's labor or just a supply shortage, we look for more granular information from our very own Diana Olick. Diana?
A big disappointment on this read, down 6%. And I want to look at a couple of things on this, actually, that the median sale price is actually up 6%, which is why a lot of buyers are pulling back. You also saw a huge jump in mortgage interest rates during the month of June, and these sales are based on signed contracts, not closing. So people out shopping around during the month of June. I'm also seeing that the inventory, that is the supply of new home for sale, jumped from 5-month supply to a 6.3-month supply. So this is what D.R. Horton was talking about in their earnings report last week when they said they were pulling back on sales on construction because they were seeing that buyer pullback there. And so you're going to start to see that inventory come up. The only good sign on that is perhaps you could see prices soften a little bit, but with prices still very high for land, labor, and materials, builders are going to have a tough time doing it. And again, a huge amount of the number of homes sold but not yet started. So builders do have a big backlog. But again, it's a big disappointment, not just in the June sales, but in the May revision lower. Back to you.
Okay, so that was great information by Rick Santelli. But there's always the other side of the coin. What they don't reference is forbearances. They don't reference a lot of things, and that's what we discuss. And we're going to go into more details this week. But the focus I have right now is, what are mortgage rates doing? Why most people follow me is they want to know what's the trend in real estate right now. Is it a good time to buy? Is it not a good time to buy? What are mortgage rates doing? And how can the Frio team help with that? So let's dig into this. One of the biggest things that people watch me or follow me for is this right here. Okay, we follow the mortgage-backed securities market. What is the mortgage-backed securities market? Okay, it is the biggest component of your mortgage rate. Okay, it's not the 10-year Treasury. It's not the federal funds rate. The Federal Reserve has nothing to do with your mortgage rate. It is determined by the mortgage-backed securities market. Okay, but what the Fed does is they're helping support the market right now by this. They're stepping in and buying up the mortgage-backed securities market. So when you have more buyers in the market than you have sellers, you push up the price. Okay, so that's basically, in a roundabout way, what's going on. All right, so when we talk about, or when the Fed maybe talks about tapering, they're talking about reducing how much mortgage-backed securities they are buying. So if they reduce the amount, the assumption would be the prices would go down, pushing up rates. Okay, so that's the big buzzword for this week. This week we see that the Federal Reserve is having a meeting, and the Federal Reserve chairman is going to talk on Wednesday. So on Wednesday we find out what the Federal Reserve did or has decided to do, and then Federal Chairman Powell comes out and speaks in front of all of us. Okay, so but the concerning thing is what happened the last 2 months when the Federal Reserve met. Okay, so here's what we have. Just this gives us history. Okay, history into the Federal Reserve meeting, we had a nice rally. So if this went out further, you could see a nice rally into the Federal Reserve week or meeting week. Okay, then at that time, inflation became the buzzword, and Federal Reserve tapering of mortgage-backed security purchase and so forth, and we had a drop in the market. Okay, it was a pretty big move actually. So the next thing that we have is we had a nice little rally after the effect, and then everything kind of stabilized. Okay, there's a little bit of jumble here, but if you go across here, it's stabilized. And then we came into June's Federal Reserve meeting, and inflation and tapering talks came about again, and the market got crashed. Okay, but what happened again is we recovered. The cool thing is we've recovered even more than where we were back in May. Remember, as this goes up, this is the price of the bonds, mortgage rates come down. Okay, we even exceeded what I expected. Okay, I expected us to trade at about a 101.8 range. That would put us right about here, and we exceeded that. Okay, where are we today? 101.56. Well, we're dropping down from where we were. So that's where we are right now. We had some stability in the market. Right now, I haven't heard buzzwords this week about inflation. I haven't heard any buzzwords about tapering. So let's go on to see what the day is doing. Because remember, the Federal Reserve is meeting, and then they're actually coming out on Wednesday and giving us their results. Well, if you look at the whole day, we basically had a stagnant day, give or take a little bit. But then around 2 o'clock, the wheels came off, and we plummeted down through. And we were down, I think, at about 16 at one point. And then we stabilized. And we closed. The nice thing is we closed with 2 green candlesticks right here. That means there's more buyers than sellers. So hopefully that stopped or halted kind of a big event of sells. Every time you see the red candlestick, it means there's more sellers in the market than buyers. So we had basically a crash, not a crash, but a drawback at the end of the day. Okay. Again, you can see here, basically today we had new home sales, and we addressed that right at the beginning. All durable goods and consumer confidence and all that. I'm going to throw that out the window right now. We're going to focus this week just on the federal chairman and the Federal Reserve, what they're going to do. And then we also have jobless claims coming in. So that might roll over. If this information doesn't help us, this information might or might not. So it's a crazy week. I'm going to analyze all the data that's coming in today. Tomorrow, we're going to talk about inflation and Fed tapering. Do I think that's coming back into play or not? So that's the big thing that we're going to talk about tomorrow. One of the big things why people come here too is, what did rates do? Okay, so rates, I'm going to show you date of July 23rd. But the rates that get posted here are always from the day before. And when it's a Monday, it's Friday. So here's where rates are today. These are not my rates. These are the norm rates throughout the country issued by Black Knight. Black Knight surveys mortgage lenders all over the country, and we send in, as well as probably hundreds of thousands of other lenders send in, and they analyze the data and they come up with, here's where the country's 30-year rates are. So 30-year fixed conforming, jumbo, FHA and VA, they're right there. Okay. Right here, 1 day, 7 day, and 4 week delta. Delta means change. So since 1 day ago, the 30-year conforming rate went down 1 basis point. What is 1 basis point? Well, basically 0.01. So basically nothing. Okay. So over the last day, nothing's really changed. Over 7 day, really nothing's changed. Over the last month, you're going to see a change of about 1/8 in mortgage rates. Okay. To the downside, which is great. Look at the trend. Since March, we've had nothing but kind of come down and down and down and down. We had a huge shocker right at the beginning of January when rates, look at the rates over here. Let's just go with this, the VA. Rates were down in December of under 2.4. Then they went all the way up to 3. That's 0.75% bump in mortgage rates. So if you closed at this time, please feel free to give me a call. We can look to refinance you at no cost possibly and get you into a lower rate than even where you were in December, maybe even in January. Okay, so that's where we are there. So that's my mortgage rates for today. If you'd like to find out more about me and my team, what I ask you to do, go to therateupdate.com. You can do it several ways. If you want to get the ball rolling and apply, just hit the apply now button. It'll take you about 10 minutes and you'll have, it basically puts everything at your fingertips. If you want to call us, give us a call at 844-775-LOAN. Okay, that's 844-775-5626. What most people are doing, believe it or not, is they're asking for help. And they're saying, Dan, can we talk one-on-one? To do that, hit schedule a meeting. It's going to take you right to this link here. You're going to click, let's say we can meet tomorrow. We're going to click that. Tomorrow at noon is the best time. Confirm it. What's going to happen is you'll get an alert, we'll get an alert. You also tell us, do you want a phone call or do you want to be it by Zoom? Maybe we can review some of your documents when you're on the Zoom call. Maybe we can go over rates with you, do a mortgage analysis, do a rate comparison. Anything that you have on your mind that would be substantially helpful for you and your family. So those are all the things that we do. So other than that, all I ask you to do is give me a thumbs up. Subscribe down below, click the bell every time I post a video, you get an alert. So God bless, guys. Don't forget to come back tomorrow, same time, same place. See you then. Bye-bye.